So I'm back again. I'm going to be showing you guys the basic reversal pattern that you often see in the market that will signal a change of trend from the bearish to the bullish or from the bullish to the bearish formation. So in this video, I'm going to be telling you guys or showing you guys the three major patterns you always see in the market. Number one is the double bottom. Number two, the triple bottom, and the head and shoulder pattern. Or we can also say it like the double top, the triple top, and the inverse head and shoulder pattern. So let me start from double bottom. Let me say we have a trend like this. Trend in a bearish scenario, let us say the trend has been giving us a lower high and a lower low, and price broke out from the recent low, came down here, gave us another low. You see, now as price has given us this recent low, let me say this our zone, price is expecting to break down this place again to give us the normal continuation pattern for the bearish move. But price came down here, failed to break this low, then come to this place, or let me say take out this high. Now, what pattern do we have here? This is the double bottom. This is the double bottom because this is the first bottom, this is the second bottom. So this is a double bottom. I will now call this place our neckline. Some people call it their neckline. So whenever price come back to this neckline, you'll be expecting to trigger your buys. So this is the double bottom formation, or let me just do something like this. This is the double bottom formation right here. This is the double bottom formation right here. So the triple bottom is just the same thing like the double bottom, but maybe to just give you something like this, like this. It's just the same thing as the double bottom, but here you'll be having three touches. You'll be having three touches here. This is the first one, this is the second one, and this is the third one. So that is why it's called the triple bottom. This is the first, this is the second, and this place will still be your neckline. So whenever price should come back here, you will trigger your buys. Now the third one is the head and shoulder pattern, or the inverse head and shoulder pattern. But in a bearish scenario, you'll be seeing an inverse head and shoulder pattern. That is when you have something like this. Let me say you're coming from a bearish trend. You see, price has been giving you a lower high and a lower low. Then price came to this place, gave us this recent low. You see, price gave us this recent low, then broke out from this place, came back here, you see, and gave us a recent high. What can you see? An inverse head. This is the left shoulder, this is the head, and this is the right shoulder. Can you see? So where should be your entry point? Your entry point should be from here, which is also the neckline. So whenever price should come back to this neckline, you will enter your buys. Or let me just do it like this so that I can see it very well. See, this is the recent low. Okay, this is the recent low right here that was taken out. Price came up. Normally, price supposed to respect this low, then take out this high. But this recent low right here, but price came up like this impulsively, came back, retest on this zone right here, then also come up like this. You can see this your left shoulder, this your head, and this your right shoulder, and also this your neckline. So whenever price should come back to this place, you enter your buys. So this is the three major pattern, three major reversal pattern that you'll be seeing in your market that will trigger or that will give you a confirmation that the market is about to go bullish or bearish. So this is the double bottom, this is the triple bottom, and this is the inverse head and shoulder. So I'm also going to be showing you guys in the bullish form. You know, the first one you saw was on the bearish, scenario. So I'm going to show you guys for the bullish. I know the bullish way will also what we have, it will not be a bottom but top. So that is when you have double top, a triple top, then head and shoulder, head and shoulder pattern. This is double top, a triple top, then head and shoulder pattern. It's just the same thing, but instead of you having a bottom, you'll be having a top, just something like this. You see, this is the top. We have the first touch, the second touch. So this is why they are calling it a double top. Can you see? This is the first, this is the second, and also this is your neckline. Very important. Or some people will call it the M pattern, and the for the double bottoms, some people call it the W pattern. But this is why it's called an M pattern, because you see price came up, gave us this high, gave us the second high, then broke out this neckline here. See, as you can see, it's like a form of an M. So whenever price should come to this place, you will trigger your sales. Put your stop loss somewhere here. Your stop loss somewhere here. Then here should be your entry. See, this for the double top. Then the triple top is when you have something like this. It's very easy, guys. Very easy. Very easy, guys. Maybe price was in the bullish momentum. You see, maybe we'll have something like this. Price was coming up, you see, giving us the higher high and the higher low, higher high, higher low, higher high, higher low. Price came to this place, failed to break, came down, failed to break again. So it's giving us trade top. So whenever you see something like this, you know that price is about to change pattern from the bullish to the bearish. Then don't always forget to mark your neckline. Always remember to mark your neckline. So whenever price has given you this pattern and price come to this place, to this your neckline, like a form of a retest, you will now trigger your sales. You see, this is very easy, guys. Then for the head and shoulder pattern, is when you have something like this. Price broke out this high, came down, retested on this place, then this your neckline. So whenever price should come down to break your neckline, give you a retest, you enter your sales, guys. You see, this is very easy. Or let me say, if I should draw the pattern like this, this is your bullish move. Price giving you a higher high and the higher low, higher high, higher low. Came to this place, give you a recent high, came down here, failed to break this high. You see, price failed to, because as you can see here, price has broken this high, came down, broke this high, came down, break this high, came down again, then failed to break this high, then break down this low. This is your neckline. Then you can see that price has given you something like this. This is why it's called the head and shoulder, because price has given us something like this. Can you see? Can you see? This is something like this is the head and this is the shoulders. Like if you can look at me very well, this is my head and this is my shoulder. Can you see it? Can you see it? This is the same pattern here. This is the head, this is the left shoulder, and this is the right shoulder. This is a reversal pattern. So whenever you see these three patterns and the previous ones I showed you guys, what should always come to your mind is price is about to change trends. Stay tuned and always subscribe. Twin Pillars FX, your mentors, signing out.